This is a demonstration of exercise 230, financial analysis using adjusted account data. And the problem gives us selected T account balances for Bloomfield Company as shown below as of January 31st. And these reflect the accounting adjustments. The firm uses a calendar year accounting period, but they prepare monthly accounting adjustments. So in these selected T accounts, the adjustments have already been made for January. So we're going to use the information in the T accounts as well as some additional information that we're given to answer questions. So in the A portion it says if the amount in supplies expense represents the January 31st adjustment for the supplies used in January and $620 worth of supplies were purchased during January, what was the January 1st beginning balance in supplies? Okay, so this is our ending balance, $900, what we have left at the end of the month. We use $960 worth of supplies during the month. So if we wanted to get the beginning balance just using these two, we would just add these together to get the beginning balance. But the problem states that we had purchased another $620 worth of supplies during January, and we know that those wouldn't have been in the beginning balance. But some of those could be ones that we expensed. So to get the beginning balance, we start off with our ending balance, what we have left, and we're going to subtract that $620 of supplies that we purchased, but we're going to add back the ones that we expensed. And that gives us what would have been our beginning supplies balance. We started off with $1,240, we purchased another $620, we've used $960, and then that leaves us with the ending balance of $900. The B portion states that the amount in the insurance expense account represents the adjustment made at January 31st for January insurance expense. If the original premium was for 1 year, what was the amount of the premium and on what date did the insurance policy start? Okay, so let's look at our accounts. We have $82 in insurance expense. So $82 is 1 month's insurance expense. And then we have $574 still left in prepaid insurance. So we originally had a larger amount, but this month we expensed $82. So we want to first determine what was the original premium. So if we have $82 expense per month and the policy is for 1 year, then we would multiply that by 12 and we can see that our original premium would have been $984. The other question they're asking us is on what date did the insurance policy start? Okay, so we know what we have left in our prepaid insurance, $574. We know that we expense $82 a month. So we want to see how much do we have left? How many months are left? So we have 7 months of insurance left. So if we count forward, starting with February, we'll get February, March, April, May, June, and July, and August, 7 months. That means that the policy had to have started on September 1st. The C portion of the problem states if we assume that there was no beginning balance in either wages payable or wages expense on January 1st, how much cash was paid in wages during January? So we have $3,200 in wages expense at the end of January, but we have $700 in wages payable that we haven't paid yet. So to determine how much we've already paid in cash, we take our wages expense and we subtract the wages payable. So for January, we have already paid out $2,500 in cash wages. The D portion of the problem states if the truck has a useful life of 5 years or 60 months, what is the monthly amount of depreciation expense, and how many months has Bloomfield owned the truck? Okay, so to determine the monthly depreciation, we're going to take the original cost of the truck, and there was nothing mentioned about any kind of salvage value, so we're just going to assume that the whole $8,700 will be depreciated. And we know that this truck is going to have a useful life of 60 months. And we want to use that instead of 5 years because we want the depreciation per month. Okay, so now we know that $8,700 divided by 60 months is $145 of depreciation per month. The next part of the problem asks us, how many months has Bloomfield owned the truck? Okay, so we can take the accumulated depreciation, which is $2,610, and we can divide that by the monthly depreciation amount of $145, and that will give us the number of months that we've owned the truck. So the truck has been owned for 18 months. And that is the end of the demonstration for exercise 230.